Hi, Mr. Field. This is Riddhi with Prospect Mortgage. I am giving you your closing costs as I promised you. I'm going to walk you through each and every number so you understand where your monies are going, and hopefully it will clarify some of the confusions that is there being of all those higher costs that are being shown in your package. So here we go. Our purchase price is 270,000 and we're putting 20% down, which comes to 54,000. So that will give us a loan amount of 216,000, and we are at 5% interest rate. This is a 30-year fix, so it will not change, and you do not have a second mortgage. So your monthly principal and interest payment will be $1,159.53. This will stay the same if you were to keep your mortgage the entire time. There is no prepayment penalty. You can pay it off at any time. Obviously, if you pay off a significant amount in the beginning years, it will save you a lot on the interest because it's a simple interest product. What that means essentially is that in the first few years of any mortgage, you will pay a lot towards the interest and less towards the principal, and it's a sliding scale. As you get more into your principal amount, less interest is going to be owed on that. So here is the breakdown of the monthly payment. Your monthly payment for principal and interest is $1,159.53. I'm estimating your hazard insurance. Your hazard insurance is your homeowner's insurance. I'm estimating at $720 per year, so $60 per month. And your real estate tax bill is from the bill that we can see, the last published bill, and it comes to $654 per month. So it gives us a payment of $1,873.53. Keep in mind your first payment is you're closing on April 29th. Your first payment is 1st of June. You do not have a payment in the month of May. Hopefully by that time you would have gotten the package from your new lender and you'll know where to make the payment. We are also going to give you a first payment coupon, so if you do not have your package from your new lender, you will use that coupon to make the payment. Again, there is no prepayment penalty or anything like that. You're choosing to escrow, um, meaning that you're choosing to pay your insurance and your taxes with your mortgage, so that when the bill comes due next year, the lender will pay on your behalf. You won't have to come up with that money because you would have been escrowing every month. Now this is the breakdown of the closing costs. We have, these are the first two numbers are lender closing costs. The origination fee, this is a bulk, or I would say bundled fee of everything that we charge: processing, underwriting, whatever you want to call it. There is no application fee. It's all here, $895. And then the appraisal is $360. That was already charged to your credit card. So even though you see it here, keep in mind on the closing day it will be shown as a credit because you would have already paid. There is no extra charge for that. The attorney fees are $450. Again, I'm estimating that if your attorney is going to charge you a little bit more, you'll obviously pay more. If they charge you less, you'll pay less. The title services, again, this is the one number I'm estimating, $2,500. It includes, again, it's a bundled charge, includes your title insurance as well as the closing company's charges for them to act as your fiduciary agent. Might be a little bit less, might be a little bit more. You and I don't get to pick it. The sellers usually get to pick the title company, since they are buying the bulk of the title insurance to make sure they can give you a free and clear title. The buyers usually just piggyback onto that policy because that's a cheaper way to do it. So again, if the price is less on the bill, you'll pay less. If it's more, you'll pay more. $2,500, in my opinion, is a very good number to have in your mind. I don't think it will exceed than that. It will be more than that. So our total closing cost for these two items comes to $4,205. There's a third part to the closing costs, which is called the prepaids. Prepaids are essentially the amounts of monies you put in escrow account for you to get the mortgage started and for you to put the real estate taxes and insurance in escrow, so that when the bill comes due next year, they'll be able to pay for you. In your case, actually, you will pay the second installment. I think Cook County is in December. But again, Cook County is not really very organized. You will be paying whenever the bill comes due. The bill is supposed to come out in October, usually comes around December. And they're not equal bills, even though you do have two bills. So whatever the amount is going to be, you will pay at that time. Again, keep in mind, you would not have lived in 2010 in this house, so you will be getting a credit from the seller. You're just going to be making the payment at that time from the funds that they will give you at the closing table, because the bill is always paid by the owner of record and you will be the owner of record by that time. The interest, the first line is interest per diem. It's going to cost you around $39, just the principal and interest, for you to own this property. And since we're closing on April 29th, there will be 2 days remaining in the month, and you will pay the interest. There is no principal payment at that time, just the interest comes to $78. Then we have the hazard insurance premium that I was estimating at $720. This will be paid up front, just like any other insurance policy. You always pay insurance in advance, so that's what I'm showing. Again, if the bill is different, then the amount will differ. They will also take 3 months, even though you would have bought a whole year's policy. They will take 3 months up front. The reason being, when the next year's bill comes due, which will be sometime in April, you would have only made 10 payments, and they're allowed to keep one payment in reserves in case the bill comes up or goes up. For county taxes, they're going to be taking 4 months to start an escrow account for you, so that when the bill comes due, they will have enough money to pay your bill. This is the money that I'm showing coming from you, but keep in mind this is actually a credit that will come from the seller, and I'll show you how. So altogether, our total prepaid expenses will be $3,594. Now we come down to this column where it shows how much cash to close we really need. So our purchase price is $270,000. Our prepaids, the taxes, interest, and insurance is $35.94, and our closing costs are $4,205. So altogether, for us to be able to own their house on 29th of April, it's going to be $277,799. Now we come to the credits, because we have lots of credits coming to us. The loan amount is 216. That's going to be shown as a credit because you don't have to come up with those funds. You're borrowing those funds. Again, now the 5200s is the seller paid real estate tax credits. I mentioned that since you did not live in the house in 2010 and part of 2011, the seller will give you the money at the closing table, because when you do the closing, they want to settle all the monies at that time, so that you don't have to go back and forth to collect the funds. So they will give you a credit. I'm assuming they'll give you at least 8 to 9 months. Again, I don't know how many months they owe you, so I'm estimating 8 months comes to $5,200. You also have the $360 credit coming from us, since you already paid for the appraisal, and you have 10,000 earnest money that you've already paid and it has cleared. So altogether, you have credits of $231,560. So if we deduct 231 from 277, we are left with 46,239. This is the amount, in my opinion, you're going to need on the closing day as a cashier's check. Since it's less than $50,000, you can bring a cashier's check. I always suggest this to my clients, and please talk to your attorney about this too. I always suggest to my clients to have the cashier's check made out in their name, and they can endorse it to the title company. It's a large sum of money. I hate to put it in somebody else's name in case for some reason it gets misplaced or anything like that. But you can definitely get it made in the title company's name, whatever your attorney suggests. Give me a call if you have any questions. I hope this clarifies all the questions you had about your closing costs, and hopefully makes you feel a little comfortable that this is what we had promised you and this is what they are. Give me a call. This video and this Excel is not by any means for me not to answer your phone. So give me a call if you have any questions, and I'm looking forward to a very smooth closing. We've already submitted your file to underwriting. I'm hoping to have an answer on Tuesday, and I look forward to talking to you. Thank you again. I talk to you soon.